What's up, guys? It's Brian from HASHWAREHUB, and it is December 22nd at about 9:50 p.m. Eastern Time. And what a crazy day on the cryptocurrency markets. Just about everything tanked, to say the least. We are going to go over, in particular, Bitcoin, because Bitcoin was kind of one of the major ones, and they all pretty much had the same trading pattern, to say the least. As far as, at least, I would say, at least like the top 5, 7 of them. If not top 10 of them. So we're going to go to Bitcoin just to concentrate on that. But first, hit the subscribe button, hit the notification bell so you get all of our information directly to you. I think it gets emailed directly to you if you hit that notification bell. Especially like today, we were going over real-time trading. We were trading real-time the dip. And I think that this is something that is really invaluable as far as how to deal with these types of sell-offs. So yeah, what we're looking at right now is a coin market cap, and everything's down. Everything basically is down. There's a few things that were up, but even earlier on in the day, these were down even more. So right across the board, everybody's searching for a reason as to why. In other words, a headline as to why the sell-off. Everyone's looking for a reason. Oh, is it China? Oh, is it this? Oh, is it that? Well, there doesn't need to be a reason, and this is something we've been saying for quite some time. We're technicians. We don't look into the fundamentals of things. But I will give you a reason, and I mentioned it in my video earlier today, and I mentioned it actually about a week ago. I will give you a reason why we think this is going on. But regardless of why we think this is going on, the chart tells us it's going to happen, and this is what we've been saying for quite some time. Regardless of the fundamentals, the technicals have been telling that this is going to be happening for some time. So let's take a look at, this is going to be trading view, and right now we're looking at the BTC USD 1 hour chart on Bitfinex, and yeah, I mean, there's this head and shoulders pattern that had showed up. But this head and shoulders pattern is not the typical head and shoulders pattern that we normally would like to see. Reason being is because the volume is not going in the same pattern. Normally, with a head and shoulders pattern, the volume, as far as the amount of volume with respect to the head and shoulders, generally should correlate with the price. That's one of the ways in which you can confirm a head and shoulder pattern. So, we're really not sure if this was a head and shoulder pattern. Early in the day, we thought it was, but that's, as we look at it now, it probably wasn't. But with that said, our price target where the market was going to come down to was right about here, okay? And we did see there was a little bit support right here and right here. Our second price target, and this was just for us, we didn't want to confuse people, was right here. And the reason being is because there's more support going along here. Okay? Now, what we used was actually, we saw that this was the price target, and then we said, okay, let's go ahead and try to buy when the market is a little bit lower than there. And actually, we actually bought this on Coinbase. So this is on Bitfinex. The price was slightly different. I think it was about $300 less on Bitfinex at the time in which we bought it on Coinbase. On Coinbase, I think we bought it about 11,600. And we actually bought 11,600, and here it's we're marking it at 11,300. So yeah, that was a disparity as far as pricing at that time of the day. But really, as we mentioned in our video, why did we, the video we made earlier today, why did we purchase specifically at this level? Okay, A, because of the support that was right here. B, because of the fact that this was kind of the termination, the ultimate termination of this triangle right here, where we thought that the market had prematurely exited out here. But most importantly is that we had this huge volume tug right here. Okay. The volume was low here, right in the middle, right? Volume was low, and we'd like to see the volume high here for a true head and shoulder type pattern, okay? Volume was really high here, and it was really congested. Not so much how it was here. Here it's high, but it's also not as congested. But here it was super congested, okay? And that leads me to believe the what we believe to be the fundamental reason as to why this happened. I had made a video some time ago. It was the night before or the day before the futures market started trading, and I said beware that the big guys, the big boys, are coming into the market and they're going to really push things around. And I think that's exactly what happened here. They saw a weakness in the market. They saw that there was a tendency of the market to go down. They saw that there was a lot of new money, a lot of, I'll call it dumb money, that came in. When I call it dumb money, I don't mean the people who are dumb who are purchasing it. I mean the fact that they were not knowledgeable of this industry at all. Okay, they hadn't heard it, they hadn't purchased it a long time ago. They didn't do their homework. All they saw were headlines, and they wanted to get rich quick. And those are the guys who were purchasing it. And the guys on Wall Street, hey, I was one of them. They feed on this type of stuff. So they knew that they would be able to strike fear. And basically, they knew that they were going to get the herd to flee, right? And that's exactly what happened here. The market sold off hard. It sold off really hard, okay, with little really any time to really breathe, okay? Everybody saw this head and shoulders kind of pattern going on, and man, it just rocketed right through. And then it came up for a second, kind of to the neckline. It just touched it, and it was gone. It was done with. It didn't even hang out here for longer than a few seconds, okay? That leads me to believe that a lot of the Wall Street guys were really behind this, pushing this down. And what were they looking to do? They were looking to purchase, right, at a cheap price. And they were going to purchase down here somewhere, okay? Again, I used to be one of these guys. So they were looking to purchase down here somewhere. And so that's exactly what I did. I purchased right here. Right here is 11,300 on Bitfinex. And on Coinbase, it was 11,600. Right here. The next place in which I wanted to purchase was right here. Okay? But I didn't do it. I was too slow. Somebody called, actually. To be honest, somebody called me, and I was helping out a client. So I missed this trade right here. Okay? But the market was only here for a few seconds. I didn't get my limit order in. Okay, stupid me. Anyway, I was super happy with this right here. Okay, very, very happy with this trade right here. And this was just like, you know, being super technical. If I was a trader back on Wall Street, I would not miss this trade right here. No matter what happened, the building was burning down. I would not miss this trade right here. So, yeah, so that's really how we went about, you know, purchasing the dip. And, you know, we can do this with clear mind, and I had mentioned this in our video earlier today. Why can we do it with clear mind? Is because we've been selling, we've been telling people to sell here, 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 here. Okay, all the way over here, here. We've been telling people to sell, sell, sell. And we've been doing the same thing with our positions. We've been selling. So we reduce our position very, very to where it's something's very, very small with respect to our beginning position. So we can take some of that money that we had on the sidelines, and it can really be really specific about where we want to go ahead and place our bets. And our bet was placed right here. Okay, so the market here, and this is again on Bitfinex, okay, went from 11,300 to right now it's 13,000, let's call 570. That's pretty freaking awesome. Okay, that's $2,000, let's call it $370. Okay, $2,270. So, that's amazing. That's a well over 20%. Well over 20% in, let's say, a handful and a half of hours. So let's move on to the charts that we normally are looking at. We want to show you guys some information there. Okay, so this is a chart, a type of chart that you guys may be familiar with if you're familiar with our videos here. And this is Bitcoin. This is the daily chart. Before we're looking at the hourly, this is the daily chart. And okay, here we got the blue lines. Everybody's familiar with the blue lines. Wow, okay. Yesterday, the market came through the blue line. interesting. And today, man, it just rocketed through. Okay, blue line is gone. Blue line is gone because there's a different trend here. Okay, it's not to say that the market won't run up again. It's not to say that. But as far as the indicators are concerned, it's not bullish anymore. Not at all. Zero. So you can see that the trend strength, okay, fell off from yesterday being high here to here. Okay. Now you could say, well, wow, this just happens shortly and there was no warning. Wrong. There was warning. We've been warning as the trend here has been diverging, okay, from the market direction. We've been saying, hey, something else is going on here behind the scenes. Okay, when I say behind the scenes, technically what we do is we actually clean the data, okay? So we clean the noise from the data. So when we clean the noise from the data, you then get to see behind the scenes, right? You get to see a better picture without all the noise, right? So it's almost like tuning a TV back in the day. You know, you get the rabbit ears tuned in order to remove out all the interference, all the noise, so you can see the picture correctly. Same type of thing here, okay? So that's, again, another reason why we're like, even when the market ran up here, okay, and we didn't see the D-trend would be falling off just yet, but like, wow, the market's all the way up here. It's very far away from the blue line, okay? Start removing some of your position. Remove, all the way over here, okay? We've been saying the same story over and over like a broken record, okay? Then MACD yesterday turned negative, okay? Went from here to here, negative. The sine wave indicator, now we don't use a sine wave indicator as a direction. It's more like a low risk. It's part of a low risk entry point. So when the market is going up and the sine wave comes down and makes a bottom and the pink crosses over the blue, we then say that's part of a low risk entry. So the sine wave, you know, once in a while you can look at it as it's saying, okay, fine, it's going to indicate a change in direction of the market. Okay, but you can see when the market is trending, the sine wave doesn't do such a great job. Okay, reason being is because the sine wave is cyclical, and when the market's not cyclical, it doesn't do such a great job. But you could see here that there was confirmation, even with a sine wave, you know, starting basically here, you know, basically 2 days ago. So, you know, this is where we're at right now. So, for those that were not selling right here, you may be asking yourself, well, what now? Give me your crystal ball. Well, there is no such thing as a crystal ball. That's why you need to manage your risk and you need to manage a trade that you're in. Okay, you need to get into a trade at a preferential price, like I was showing you before when we purchased on the dip. And like as I was saying, you can purchase all along here. Even over here, okay, this would have been a lower risk entry. Not here, not here, not here, not here, okay? Even over here, if you purchased over here, okay, you still had a chance to get out of a little bit of a profit here. Even if you purchased here on this market, okay, it's still a lower risk trade than when you are to purchase up here or here or here, right? Because now you know that the market has changed. Market has changed. When you purchase up here and the market comes all the way down here, well, you have the loss, but you don't know if the market has changed. Now, if you purchase here at the blue line and the market comes down here, you know that the market has changed. You know you need to do something about it. Okay? So you need less of a loss to prove that something has gone wrong, okay, than when you purchase here versus here. So why are we always so crazy about de-risking? Okay, reason being is because if you purchased anywhere along here, okay, or even if you didn't purchase anywhere along here, but you just held your position all the way along here, okay, when the market moves down here or here where it closed, okay, your options are limited. They're severely limited. So your options really come down to a few different things. You can either hope and pray that it goes back up, and that when it goes back up, you're going to sell part of your position, which probably won't happen. Okay? Or you can say, well, if it goes up a little bit, I'm going to sell some. Or then the other option is that, well, okay, if it goes down a little bit more, then I'm going to sell. Okay? None of these are good options at all. Zero. They're really kind of like licking your finger and throwing it into the wind. So, and probably licking your finger and throwing it into the wind is a better measure of direction of the wind than what you can have here in the market. So, as far as our recommendation, what we would do if you were somebody that purchased kind of in these levels here, or you didn't de-risk at all, I'm not really even sure what to say. We wouldn't even go about the trading this way, so I'm not even sure what to say. What I would say is that, maybe it's time to start selling off a little bit. Here, I mean, it's unfortunate you're selling off some a little bit here when let's say this is approximately 14,000. The market had run up to like over 20,000. So, that's 6,000 change. I mean, it's like, what were you doing during this time period? Were you sleeping? So it's like, as a trader, I would have a very difficult time explaining that to my superiors that I didn't get out of any of my position in these ultimate super high ranges. My job would be on the line. So, and you should think about that this the same way. Trading is not a hobby, it's a profession. Okay, trading is like a profession, like doing surgery. It's the same thing. You go to the surgeon that has the most experience. Why? Because he has the most experience because of the fact that he's seen the most. He's been in the most shitty of situations and seen what has worked and what doesn't work. It's the same thing here too, okay? Trading is something you need to see all sorts of different types of markets and be able to understand not only your own emotions, but actually what you can actually do in the market at that particular time, how you can read the market, et cetera, et cetera. So if you don't approach trading in a very serious manner, you're not going to be successful at it. You really need to look at it like a profession. I remember in the 90s when, CNBC came out. This was kind of the beginning of my career, and, they almost like turned, trading or Wall Street into kind of like, Monday Night Football, and it was kind of like watching ESPN almost. So, and a lot of people kind of got into it, and a lot of people made some money, but most people, I think, lost a ton of money doing it. So it's a similar situation going on here where everybody's kind of, I use that Tom, Dick, and Harry analogy where everybody's getting into it. And it may not be the best of things. All markets kind of go through these growing pains, and this market's going through this growing pain too. That does not take away from the technology. I'm a huge buyer of the technology. I love the technology. I think it is the way for the future. I think it is the future. It may not necessarily be Bitcoin, but it'll be something Bitcoin-esque or Bitcoin-like. So, yeah, I mean, that's our 2 cents. That's our, I'll get off my soapbox now, but this is kind of what's going on now. You saw how we purchased, in that downtrend. I would not purchase again now at these levels where things picked up. There's nothing to say that the market won't turn back over again and go and head south. There are some support levels that I was mentioning prior when we were looking at TradingView that may make that a little bit more difficult in order for the market to move down much more. But yeah, I mean, the market's not in an uptrend anymore. I can say that. I can say that with a lot of confidence, a ton of confidence. The market, in particular the Bitcoin market, and usually in like the top 10 currencies, as far as market value is concerned, or market cap is concerned, they're not in an uptrend anymore. So the game changes. The whole analysis changes. You can see here the red dot, no, not the red dot, but really the red cross right here indicates, hey, it's time to sell. The market's no longer in an uptrend anymore. It's in a downtrend. Now, again, it's not to say that with the blue line may not show up. Not to say the blue line won't show up. if the market tends to kind of go up again. You can see that happen here. The red cross happened right here, and then the market tended to go up from there. Okay, the blue line showed up, but the red cross is it's not something that's 100% foolproof, but it does show you, hey, wake up, trend has changed. Anyway, with that said, I'm gonna leave it there. I don't want to make this thing too long, but happy trading.